Hello, everyone. Welcome. Great to see you all with us. We'll just give a few more moments for people to join by clicking on the hour. It's great to have you with us for our final webinar in this series. Just as we wait, please do introduce yourself in the chat. Let us know which country you're in. If you've been to all the other webinars, why you want to learn about the illustrative financial statements. Get cracking very shortly. Okay, I think others can join us as we go along. Brian, if you see Karen or Paul, make sure they've got presenter status as they come in. Super, so let's kick off for proper. Welcome to this webinar presenting the illustrative financial statements that are published as part of the INPAG Implementation Guidance Annex A. I will share a link to it shortly, but it's also on the website under the INPAG ED3 page. You can download it easily. My name is Samantha Musoke. I'm the project director for IFR for NPO with Humentum, based in Uganda. And we are or will be joined by Karen Sanderson, who's the technical director for INPAG with the Chartered Institute of Public Finance and Accountancy in London. And I think even in the same building, we have Paul Mason, who is on the CITFA technical team and was actually the one who drafted these illustrative financial statements, and they'll be available to answer our questions later. I've also got Brian here with us supporting on the technical side. Thank you, Brian. So as I say, please do feel free to introduce yourself in the chat. It's always really nice to know who's in the room with us, and just let us know which country you're joining us from. So this is the last of our series of 5 webinars relating to Exposure Draft 3. You can access all the slides, recordings, and even some written answers to unanswered questions from the events section of the IFR for NPO website. So if you missed any of these, please do feel free to go back and look there. Now, if you were in any of those 4 webinars, you'll see that today's is a little bit different. We won't be playing a pre-recorded video, and we won't be sharing translated slides either. Now, that's because the slides in today's presentation are screenshots from parts of INPAG that have not been translated. So I'm afraid it's an English-only event today, sorry. But if you would like to translate the captions, you can do it using the guidance that Brian will share in the chat, using go via the 3 dots more option. So as usual, the whole purpose of sharing the proposals in Exposure Draft 3 is so that you can share your opinion. Your feedback really, really matters and will contribute to INPAG being more relevant, user-friendly, credible, and fit for purpose. And we'll let you know at the end of the webinar how you can submit a formal response to Exposure Draft 3. This is our session flow for today. We're pretty much done with the introduction. I'm going to give a presentation. Please do use the Q&A function for any questions or comments that you have as I'm doing the presentation. Again, that should be available via the 3 dots and more button at the top of your screen. If it's general things about the webinar or introductions, use the chat. If it's a question or a comment that you reflect on, then please use the Q&A. You can also upvote and comment on other people's questions as well. So I'm looking forward to your input and involvement there. I've just seen there's a lot of people waiting in the lobby before we started the meeting. I hope they're now in. That's super. Oh, now I'm puzzled. The number of people has gone down to 3. Brian, what's happened? Have we lost everybody? No, I'm confused. Brian, can you see him? We have people in. Okay, it says two people on my screen. I'm suddenly worried that we only have 2 people. in the room. Okay, so without further ado, let me get started with the presentation. What we're going to look at is, so first we'll look at the role of these illustrated financial statements. We'll look at the background about the organisation, which is creatively called NPOA. And then we're going to focus on just 4 key areas of interest. That is the primary financial statements, the income from grants and donations, expenses, classification, disclosures, and then finally the supplementary information, which gives that link to the grant reports. Now, we can't cover everything that's in the illustrative financial statements, so I'd really encourage you to look at them yourself. And I think Brian is going to share a link in the chat so that you can look at them yourself afterwards as well. So what are the illustrative financial statements for? I'm really excited about them, and I've been looking forward to seeing them as they were being drafted, because I think they're a great way to visualize the outcome of the requirements of INPAG in a sort of easy to digest way, especially if you're used to looking at financial statements. And they can illustrate how the application of INPAG might be presented in this sort of sample organization. They're presented as part of the implementation guidance to be really useful for preparers and auditors. That said, there's some really big caveats, and standard setters are really nervous about issuing illustrative financial statements because, of course, they're not representative in any way. There's a huge range of NPOs in the world. Some might have different types of transactions. Some might be much simpler and therefore have much simpler financial statements. There might be much more complex transactions and bigger different sizes. So just to know, this is not representative. It's just an illustration of what these NPOs financial statements might look like. Now, where there are choices or options allowed in INPAG, these are mostly not shown, and I'll try and call these out when I notice them. And crucially, there's not in the illustrative financial statements doesn't include a narrative report, and it also doesn't include any supplementary statements presented in accordance with INPAG Practice Guide 1. So it's really just the financial statements themselves of NPOA. And the biggest caveat is please never use these as a checklist for how you should do your reporting. It's really not intended for that purpose. So with that, some really basic information about NPOA. So it does research into respiratory diseases, and it also supports individuals and families suffering from those diseases. It's in country Z, and it also has operations in country Y and X, and its financial year is January to December. So it doesn't tell us a whole lot, but you would see a lot more in the narrative report, of course. Now, the readers of the financial statements come with a number of questions when they want to get out of the financial statements. So we as preparers, we need to have their needs in mind. So the information in the financial statements can be used to answer questions about, financial health, things like level of reserves and liquidity, or value for money and efficiency, if we look at things like support costs or indirect cost rates, which I think are actually a very poor measure of value for money, but some people look at that for that reason. We could be looking at income sources, income quality, donor dependence, and the cost of raising those funds. And of course, trust and fiduciary issues around related parties or losses or write-offs or compensation. Now, the complementary information in the narrative reports, looking at registration status, governance, etc., would also be very helpful. But as I said, today we're focusing on the financial statements themselves. And each NPO will need to decide what is the appropriate information to present for them, for their users, as long as it complies with INPAG. So we're going to start off looking at the primary financial statements. There are 4. And I think we can understand the accounts best if we look at them in this order: the statement of changes in net assets, statement of income and expenses, the statement of financial position or balance sheet, and then the statement of cash flows. Now, they're all presented in thousands of currency units, and I'll mostly say the number that appears in the accounts, like I'll say 52 rather than 52,000 each time, just to try and keep it a bit simple. So let's start with the statement of changes in net assets. It's a statement that starts with the opening balance of net assets and shows the movement to the closing balance on net assets, as you can see in that little box. And we've got columns for unrestricted and restricted funds with a subtotal for all funds, and then a column for revaluation reserves as well. Now, in these four little numbers here in this box, this is the big story, the big picture story, if you like, of NPOs finances in a micro nutshell. Anything else we look at, please remember that it's in the context of these four numbers. They have opening net assets of 1,358. They have a deficit for the year of 52, a revaluation gain of 8, and closing net assets of 1,314. Now, do remember these opening and closing fund balances, net asset balances, because we'll see those on the balance sheet as well. Let's take a closer look at the closing position. What we can see is we have positive net assets. That's always good to see. Net assets can be an indicator of size, can't they? So it's quite a useful and important number. We can also see the change from last year in the different types of funds. So unrestricted funds have gone down from 973 to 692, and restricted funds have gone up from 385 to 614. And it would be helpful to have some commentary on that in the narrative report to get some context for that. Now, both unrestricted and restricted funds have positive balances. So even if you've got a positive balance overall, it might be due to negative on one and positive on the other, and any negative balance would require further explanation. And we can also see from here that out of the total of 1,306, 47% are subject to external use restrictions. That's the 614 over 1,306. It's also worth noting here, because I have seen board members and people reading financial statements going, oh, unrestricted funds of 692, is that all cash? No, that's not cash. This is net assets. So this includes fixed assets and other aspects of net current assets and liabilities. It's not all cash. This is a fund balance, not a cash balance. Let's take a look now at this row for the surplus or deficit. We can see there's a deficit of 52 for the year, and it would be really easy to jump to the entirely wrong conclusion that this means the organisation is not covering its costs or it's being somehow mismanaged. Just to state again, that would not be a valid conclusion. We can see it's actually made up of a surplus on restricted funds and a deficit on unrestricted funds. One is going down, one is going up, but the net effect is this a deficit of 52. Now, if we look first at the financial result on funds with restrictions, that's surplus of 234. Again, this doesn't mean that this is a profit. It just really likely relates to timing differences between income and expenditure in different years. For unrestricted funds, the same is true. It could be, this deficit could be due to a timing difference, but I would say this deficit of 286 is interesting, and it's worth understanding where it's come from. Is it simply a deliberate decision to spend money that was received last year, or could it be a sign of a problem? We would need to delve deeper to find out. Okay, so let's look at the second primary statement, the statement of income and expenses. What I've got here on the screen is a very summarized version to fit on the slide. There is more information about income and expenses as well, which we'll see shortly. Now, we can see that it ends with that surplus or deficit for the year. And if we had looked at this first, we might have concluded, oh, deficit problem, but we can see from the statement of changes in net assets, it's richer than that. So there's no requirement to do this, but it is possible, and NPOs may choose to present the income and expenditure statement with different columns for restricted and unrestricted funds. But NPOA has decided not to. It's presenting this statement in a single column for each year. Now, a quick look at the comparison to last year shows that income's gone down a bit and expenditure has gone up, which you can see in those arrows. So let's look at the income first. We've got that income of 2188. It's shown in 3 categories. We've got revenue from grants and donations, revenue from goods and services, and other income, totaling that 2188. We can see the biggest drop is in that row for other grants and donations, which is down from 1385 last year to 990 this year. And if we were to look at note 6, which we won't do now, we would see that that's because they had an additional unrestricted government grant the previous year due to COVID. So we've got a bit of an understanding of what's happening in the income. This here is an extract of the expenditure section, again from the statements of income and expenses. And the expenses total 2241. Now we can see the biggest increases here seem to be staff costs and research and development. Now these could be from restricted funds. We can't actually tell. Now, of course, if NPOA had opted to present the income statement with the separate columns, we'd be able to tell what's driving that deficit on unrestricted funds of 286. So it would actually, I think, be quite important for NPO to provide some commentary with an explanation in their narrative report, because we can't totally tell it from the numbers alone. Now, do remember those numbers, 2188 for income and 2241 for expenses, because we're going to see them again later on. Okay, we're on to the third primary financial statement. This is the simplified version of the statement of financial position or balance sheet. That's giving us this snapshot of the assets, liabilities, funds and reserves as at 31st of December. Now, this way of presenting a balance sheet might look very familiar, or it might look a bit unusual for you depending on where you are in the world. So just like IFRS for SMEs, INPAG allows 2 different styles or presentation approaches for the balance sheet, which are commonly called the horizontal and the vertical method. So the horizontal one has, assets on the left and then liabilities and funds on the right, while the vertical approach has assets minus liabilities on the top equal to funds on the bottom. And we can see here that NPOA is using that vertical presentation. We've got assets, non-current and current assets, minus liabilities coming to that's on the top, coming to net assets of 1314. And then we have the analysis of those net assets by funds and reserves on the bottom, also totaling 1314. Now, this balance sheet, this statement of financial position, can be really useful for understanding NPOs' financial sustainability. And you could do this, for example, by comparing the level of unrestricted funds with the annual expenditure to see how many days worth of unrestricted funds there were to support NPOA in an event of a shock, for example. Now, it is worth here taking a small moment to talk about the term reserves, which is commonly used in the sector to talk about and assess sustainability. It's something we talk about in Humentum a lot, but there is no globally agreed definition of general reserves, and INPAG doesn't use the term reserves in that way. So in INPAG, the term reserves is only for revaluation reserves, just like it is in IFRS for SMEs. Great. Now, within current assets, in the more expanded version of the balance sheet, there's this cash balance of 357. Now, we can see that cash has gone down by nearly 400 or something, and yet we know the deficit for the year for the whole organisation is only 52. So how come? Now, obviously, the cash flow statement is a great place to answer that question. Now, in INPAG, you can do either the direct or the indirect method. And in fact, both are shown in the illustrative financial statements, which is really helpful. But here I'm just going to look at the indirect method, which starts with that deficit of 52 at the top and reconciles down to the reduction in cash of 377. Now, in this screenshot, there are quite a few rows missing that take you from 52 at the top to 253 Now, if we did have all those numbers, we'd be able to see that the reason that cash has gone down is primarily due to settling of creditors from last year and increasing debtors. And then we've got this repayment of borrowings of 100 that we can see in the financing activities section. And one thing I would like to point out in the cash flow statement is this section called investing activities. And the word investing can make you think of investing money for financial return. But in this context, it's a more general use of the word investing. It's just investing in the future, specifically purchasing assets that can be used over a number of years. It's a really helpful section because it picks out that capital expenditure that obviously doesn't show up in the statement of income and expenses. That's a very useful statement for those reasons. Okay, so we've had a look at the kind of big picture from the 4 primary statements. Let's now take a closer look at grants and donations, which obviously are a key area of interest. And I should say I'm not being able to monitor the chat while I'm doing this. So Karen, I hope you're on that, and I hope that there's nothing there that I need to take note of. Okay, so what we've got here is an extract from the statement of income and expenses showing the income from grants and donations. The first 2 rows are both grants with restrictions. So it's firstly enforceable grant arrangements, which are grants with restrictions, and then other funding arrangements or OFAs, also with restrictions. The third row is then other grants and donations, which are without restrictions. And finally, we have donations in kind. Now, the information here could be used to calculate the proportion of income that is restricted or from institutional donors, what we sometimes call it donor dependency. That's another useful measure of financial sustainability. For now, we're going to take a closer look at this revenue from enforceable grant arrangements. That's 124. And we're going to go to note 5 to see what's there. So we can see that they have 2 enforceable grant arrangements. Now, what that means is, of course, that they have deliverables or obligations that mean that the revenue can only be recognised as and when those obligations are met. Now, for the longitudinal study, there's some text here. It says it's a 10-year grant of 1 million. They've received 72,000 in April. Now that's the second quarter, month 4, if you like, because it's a January to December financial year. But they've received it in April for one year's worth of salary. So what they've done is they've recognised 9 months of that income. That's the 54 that we can see in the note. Now, for the research database, that's the second grant, they received a grant of 70 in full in December of the previous year. But they completed the work and they recognised the income in this financial year. Now, I should say, apologies, there is a little typo in the text of the published document. It says 50,000, but it should say 70,000. So if you're looking at that, avoid the urge to get confused. It's just a typo. Okay, so that gives us some information. Yes, the typo should be corrected, but in the published document, which is a PDF file, it's been published already, so we will correct it in the next version. Okay, so now for enforceable grant arrangements, if the NPO receives money before it's done the work and recognised the income, that then gives rise to a liability. And in this bottom section here, we can see on the balance sheet, there's a row that says liabilities-EGA from enforceable grant arrangements. We've got 18 liability for this year and 70 for last year. So then in note 5, underneath the last bit we looked at, it provides a bit more information. We've got a column for each of the grants. We can see for the research database, we've got the 70 that was received last year before they'd done any work. So we had a liability at 31st of December last year, 70, which was then released during this financial year to give us a liability of 0 with respect to the research grant. And then for the longitudinal study, the NPO received 72 this year for the staff costs, but only recognised 54 as revenue, as we saw. So that balance of 18 shows up again as a liability on the balance sheet. So we can see some information about how these liabilities arise and which grants they relate to. Okay. Back to the income section of our income statement. We've looked at the enforceable grant arrangements. Let's take a bit of a look at the other funding arrangements with restrictions. This is note 6. So what this note does is it unpacks these other funding arrangements with restrictions, provides some information about each of the grants. What's interesting here also is that the income from a fundraising campaign is also included, because NPOA expressed an intention to use the funds only for research into chronic obstructive pulmonary disease. So even though it's not a grant, it's still another funding arrangement with restrictions. Okay, so now we've got into the weeds a bit of these different grants and donations. I want to show you an amazingly powerful note in NPOA's financial statements that really help us see the big picture of what's going on with the different grants and funds. It's called the Movement in Funds Note, and it's incredibly powerful and it's mandatory. For each fund, it shows the opening balance, the income, expense, other changes and transfers to arrive at the closing balance. Pardon me. On the left here, we can see that the top section of rows is for different funds with restrictions, both EGAs and OFAs, and the bottom section is for funds without restrictions. Now, if we look at the totals at the bottom of this note, hopefully they'll look familiar. It's really important that they match to the statement of changes in net assets and the statement of income and expenses. Let's just check if they agree. So in the statement of changes in net assets, we can see the opening funds of 1358 and closing funds of 1306, which is the same here. We can also see that the restricted fund balance is 614 and unrestricted is 692, which is the same in the movement in funds note. Basically, you can probably see that this movement in funds note is kind of an expansion of the statement of changes in net assets, but with the rows and columns flipped. It's basically just giving us more breakdown, more detail of the changes and the types of funds. Now we can also see that the total income and expenses in the note 4 agree to the statement of income and expenditure as well. So we can see that everything ties up very nicely. Now, in this top section, we can see a really helpful summary of both the EGAs and OFAs with restrictions. Now, you can imagine that if NPO were presenting a grant report for any one of these grants, and it was using the format in INPAG Practice Guide 1, which we'll look at, it would reconcile to these figures, to a particular row in this note. Now, if NPOA had hundreds of grants, it wouldn't necessarily need to list each and every one here. They could be aggregated as appropriate. Now, what's interesting here is the first grant for the longitudinal study has a negative fund balance at the end of the year of 26, which is the income that was recognised of 54 minus the expenses there. Now, normally we wouldn't expect to see negative fund balances. So INPAG requires an explanation for any fund that's got a negative balance. And there's an explanation at the bottom. It says that it's expected to be recovered in future years and any unrecovered amounts will be funded from unrestricted funds. There's also a requirement to explain any transfers between funds. And in this case, we have a vehicle where the use restriction has expired. So it's transferred from restricted funds to unrestricted funds. Okay, looking at this bottom section, we're looking at the where are the unrestricted grants and donations, the income would be within this 1672 here of the general fund row. And we can also see that this total unrestricted funds of 692 includes some internally designated funds. They've been designated by the board for capital improvement works and IT development. This is a really nice way for the NPO to be able to show what its unrestricted funds are set aside for, and to justify the level of unrestricted funds that it has. Okay, continuing our look back at grants and donations, we've come out of note 4, the movement in funds note, back into looking at donations in kind. This is note 7, so let's take a look there. Quite a lot here, but NPOA has received some donations in kind, and these are recognised in the financial statements. There's also some additional information and disclosures that help us to understand. First thing to say is that all of these donations will have been valued at fair value. Let's start actually with the councillors here. Now, it says that their services were mission critical. So the value of their time was recognised for that reason. But at the bottom, it's got amounts not recognised in the financial statements, and that was due to a volunteer researcher from overseas. It wasn't recognised as income, but some details were disclosed instead. Now, the minibus is an interesting one because it's a donated asset. And we can see in the note at the top, there's income of 12 here, but the expenditure of 2 is just the depreciation on that minibus, the depreciation component. And it also explains that NPOA has chosen to put all of its restricted assets into a single fund where it tracks all those restricted assets. That's not a requirement. NPO has chosen to do that. Finally, let's look at the asthma medication donations. Some of them weren't used because of their expiry, and those ones weren't recognised as income. Rather than have to recognise it as a donation and then write it off because they've expired, they've taken advantage of an exemption in INPAG section 23. They recognised income of 50 and an equal expense of 50 relating to those donated medical supplies. What we're going to do now is move to on the next slide, we're going to actually look at the inventories note for medical supplies to see how that connects. So in this note 13 for inventories, it's an analysis of the movement in inventories. We've got the opening balance of 40, purchases of 257, and those donations of 50, as we saw in the last slide. Then the utilisation of 300 coming to the closing balance. Now, it's important that even though this inventory will be used rather than sold, it still has a value on the balance sheet because of its service potential. We don't have to do the lower of cost and net realisable value, which would be sale price, which is nothing. We can recognise it as it because of its service potential. Okay, third little section here on expenses. We've looked at the primary financial statements. We've looked at income from grants and donations. Let's look at expenses, classification and disclosures. So this is the way that NPOA has chosen to present its expenses on the statement of income and expenses. They're grouped into 3 categories: operating expenses, expenses on grants and donations, and other expenses. Now, with these expenditure headings like staff costs and rent and medical supplies, we can see that they have chosen to use a natural classification according to the inputs of what they've spent their money on, rather than the activities or the programs that they're delivering. If we look at these numbers, we can see that nearly 60% of their costs are staff related. That's interesting. We can also just take note of the fact that the expenses include the costs of donated volunteer time, as we saw in that other note, and the donated medical supplies. There's also further information and breakdown in all of these notes. We're just going to take a look at one note, which is at the bottom, note 11. So some really rich and interesting information here that I think would be really useful for the users of NPOs financial statements. The first table shows an analysis of the total expenses, 2241, broken down by missional activities, fundraising costs, and support costs. It's then chosen to give a further breakdown of those missional activities of 2052, things like the respite care program, etc. Now, it's done that because it's providing some services for a fee. And the information in this note means that users can see the income and the costs for each of those services. For example, if you were to go back to the income notes, you could see that the income from respite care in 20OX2 costs more. It costs more to run than the expenses were higher than the income with respect to the respite care. Now, that might not be a problem, but it's important to know that they are running that at a loss. Are they intending to? Is that strategic, or is that a problem? That's important to be able to get that information from the financial statements. This breakdown by missional activities or program could also be a really useful link to further information in the narrative report about the impact of this work. How many people, what kinds of difference has this work made to the beneficiaries in the communities, and the research that the medical breakthroughs and things that are hopefully happening as a result of this work. For me. So that's missional activities. If we move on to fundraising costs, these are mandatory disclosures about fundraising costs, and they explain that it all relates to the first of the 3 categories of fundraising activities, namely raising donations, gifts, and grants. NPOA doesn't have any commercial trading or investment management activities. And in the full notes, which I haven't shown here, there's even more information about fundraising costs. Now, in the very first table, again, up here, there's this really important figure of support costs, 154. Now, you could use this to calculate an indirect cost rate. And you might also have commentary about that in the narrative report. There's an explanation at the bottom of what's included in support costs, so you can give a sense of why it's so important, the types of crucial activities that are being funded in that line. Now, it's only a requirement to calculate and disclose the amount of support costs if the NPO is also presenting grant reports or supplementary statements that show support costs. Now, as we will see later, NPOA is indeed producing supplementary statements. So please remember that note that number 154 for support costs. Now, other expenditure disclosures. There's certain disclosures required in INPAG. If an NPO is subject to any national regulations, such as a Companies Act or something, then those disclosures also need to be included. One of the ones in INPAG is losses, write-offs, and special payments. For NPOA, that relates to a non-contractual payment to a former employee. They had a grievance situation and the board decided to settle with a payment of 10,000 rather than going through a legal process. Now, in case NPOA had any losses due to fraud or had paid any bribes or facilitation payments, as we call them in Africa, these would also need to be disclosed. Now, for NPOA in the related parties note, we can see the remuneration for key management personnel. That's there. And note there's also this statement confirming that no governing body members were paid. Okay, moving on. I can see time running. So the final bit, this is the final section, this supplementary information that needs to be included in the notes to the accounts, because NPOA is preparing supplementary statements or grant reports in accordance with INPAG Practice Guide 1. Now, the grant reports themselves aren't shown as part of the illustrative financial statements, but NPOA is following INPAG Section 37 and producing this supplementary information in the same format, in a statement format for the entire organisation. It's chosen to do this statement format, even though it isn't a requirement to do so. You can see the income totals 2188, looks familiar. The expenditure 2241. We've got the support costs of 154. We can see the opening and closing balances 1358 and 1314. These are all consistent with the rest of the financial statements and the statement of changes in net assets. But the key thing here is that the expenses categories here are fixed. They're not changeable, they're not flexible. And this information in this note provides an auditable link to any grant reports or supplementary statements that are published using the same headings or sent to donors. So if we take just a step back and we think about all the different ways that NPO has analysed their expenses in these illustrative financial statements, it's done it in 3 different ways. It's done it firstly by nature, according to the headings on the income and expense statement. Secondly, it's done it by function, missional, fundraising and support costs in note 11. And thirdly, it's done this mixed analysis using these fixed headings in this note 19, as required by section 37. Now, it is worth calling out that this would require, a relatively sophisticated bit of software to do 3 different types of expenditure analysis, all coming to the same total of 2281. You're just chopping your costs in different ways. It is also worth noting that NPO could, if it wanted, choose these same headings in the supplementary information for its statement of income and expense, if that made sense and if that gave relevant and useful information for users. Now, NPOA has chosen the option to pull out the capital expenditure for its grant reporting. So what we're seeing here is the second half of note 19. Starting with the total expenses of 2241, there's an adjustment made to remove the depreciation, and then the capital cost or capital expenditure of 60 is added on. And in this way, the grant reports can show grant-funded capital costs rather than depreciation, which is obviously what many donors want to see. Just going back to the top half of that note, hopefully you can see how this forms this audited link with the general purpose financial statements, so that the link to any separate grant reports that are prepared on the same basis. The individual supplementary statements for specified grants of activities could also show amounts in donor currency or donor budgets as useful comparators as well. But what we've got is here's for our financial year and our NPOA currency. Okay, that's it. That's the end of our whistle-stop tour of the illustrative financial statements. We've looked at the primary financial statements. We've taken a deep dive into grants, income from expenses, and supplementary information. There are lots of other notes that we weren't able to look at, so please do take some time to look at them yourself as well. Really looking forward to your questions and comments. There is one question about this in the invitation to comment, which is specifically, do the illustrative financial statements cover the key types of transactions that are prevalent for NPOs? Are there any really common transaction types that are missing? Of course, noting again that every single set, there's no way we can make a single set of illustrative financial statements cover or be representative of everything. That's not the intention, but we do want to cover most of the prevalent transactions. So with that, Karen, can I bring you onto the screen, and Paul, if you could put your videos on, and we'll take a look at the Q&A. Let me stop sharing. So I do that there. No questions yet. It's not what I was expecting. Are there some comments or questions, Karen or Paul, that you saw while we were going along? And just let me encourage you, even now, all 42 of you in the room, please put in a question or a comment using the Q&A or the chat.
I didn't see any questions, Sam. There were a couple of points of clarification that I think we dealt with in the chat, but I haven't seen any questions as of yet. It's a lot of information that you've imparted, so quite a lot to absorb that Sam has shared with you. But as we said, we have tried to put together an illustrative set of financial statements that cover the things that are most common. And as Sam says, it doesn't cover everything. And we also wanted to make sure that they didn't become overly complex as well in nature. So it would be great to know whether you kind of could recognise how your organisation might fit into those illustrative financial statements, or whether there's particular activities that you have or transactions that you know about where you think you're not quite sure what that might mean. It'd be great to get any thoughts around that.
Yeah, and just to add, there are actually one or two transactions which are probably not going to be common for most NPOs. So things like revaluation reserve. Appreciate most NPOs won't do revaluations, but for those that do, it's important to be able to show that and how it affects particularly that statement of changes in net assets and that movement in funds note, so that people can actually see how a revaluation, that type of transaction would affect those statements and notes.
Great. David's made a couple of comments. Thanks, David. Lots of tables. I think that's true. See that in many financial statements, and some more disclosures than would generally be required in Australia. And I think that's probably true for many places, actually. Probably more than, so certainly key management personnel might not be something, losses and write-offs might not be something that NPOs are used to having to disclose, or the fact that no governing body member has been paid, or how much they've been paid if they have. Those are things that we know that users are really interested to see, and yet sometimes aren't disclosed. And so we're balancing, aren't we, the need of users and what preparers would like to share in that. But that's great. Thank you, David, for those comments. And I can see a new one, Gareth.
Yeah. So just want to kind of just sort of add to that. I mean, I think we've tried to cover off the disclosures that are in INPAG. I think there are other disclosures where I think it's important that people recognise that they need to look at the things that are material in their financial statements rather than everything. In an effort to try and show a range of things, there may be some things that we have chosen to disclose in these illustrative financial statements that if you were doing that for your own NPO, you might not choose to do because they're not material in your own context. But doing it this way gives us a way of showing the kinds of things that could be shared.
Great. So good question here from Gareth. Are all 4 of those primary financial statements required in all cases? Are there any exemptions for small NPOs?
So there's a Paul might want to chip in. There are no exemptions for small NPOs. The one thing that we will be looking at, and I think this is in response to the feedback that we had on ED1, is whether there's a requirement to present the statement of changes in net assets if there is only a general fund and there's no other movements. Paul, that's right, isn't it? That question came up. And
yes, I think probably there won't be a requirement to produce that statement in changes in net assets if there's only the general fund and the only movement is sort of the surplus or deficit for the year, which may be the case for a number of NPOs, in which case it will be a single line statement. Information's already on the statement of income and expenses. There's no real need to produce a separate statement for that. So I think in that case, that it will be removed, but otherwise, yes, all the statements are required for all NPOs.
I personally, this is purely my personal, this is not Director of IFA, personal Sam opinion, is that statement of changes in net assets is the most important. Like, that's why I started with it, because it gives the context for everything else, unless there's nothing else happening, as you say. But I like you, I probably would never have gone to that statement first normally, but in reading NPO's financial statements, I realized you can get unhinged if you start on the other ones, and that statement of changes in net assets is really valuable. So, but it's an important question. There's a question here about inventory. I didn't get to understand if inventory disclosures need to be costed, or we're just disclosing inventory numbers, i.e. quantities. I want to speak to that, Paul?
Yeah, so the inventory is, if you're recognizing the inventory, so you're not taking advantage of any exceptions, then yes, you would be disclosing the values, either the cost or, if it's donated inventory, fair value. If it's inventory that you're not recognizing, then you're encouraged to sort of disclose what types of things you're not recognizing, and that would be then, quantity is probably what you're going to be disclosing in those cases. If you've got a value for it, that's great, you can disclose that, but if you don't, then a description and quantity would be sufficient to meet the requirements.
I've got a great comment here from Charles. In response to our question, maybe one aspect of NGO not specifically covered is income tax. In some jurisdictions, NPOs may subject to income tax for the non-grant income, or even some of the unrestricted grant income. And it would be quite helpful to see where would that go, what would it look like, potentially. That's a really good suggestion there. Thank you, Charles. And I can see another question in the chat from Philip. Is it Philip? So I can't see. From Philip. When will the standard be effective? Great question. Karen, do you want to speak to that?
Right, back on. So we're looking to publish INPAG in the sort of middle of next year, sort of summerish sort of time of next year is where we're working towards. The INPAG will be available to be implemented at any point after that. It's probably slightly unusual with many of the standards that exist. They have an effective date because there is already some guidance and they're changing the guidance to something else. This is because this is new and it's the first time. It's basically at any point after the point at which we've published. Clearly, the decisions on this, though, are going to be a matter for each jurisdiction to determine. So we are expecting the regulator, the standard setter, whoever the appropriate body to be in each jurisdiction, to determine how it applies INPAG and when it wants to apply it from. So it's any time from the point at which it's published next year.
Super. Okay. Well, with that then, if there are no further questions, will there be a link shared? Oh, there's one. Yep,
there
go
is
ahead.
a question here about fair value.
Oh, go ahead.
Yes.
How will the fair market value be determined for the donations in kind? For example, 10 laptops received in 2023. Are there any guidelines? Good question.
So the answer is yes, there are guidelines. So in section 12 of INPAG is the fair value section, and there is some application guidance there that's really all about items that have been donated, whether that is property, plant and equipment, an intangible asset or inventory, and how you go about doing that fair value. So that guidance does exist in there. And of course, it will all depend on what information is available to the NPO in terms of how it does that valuation. So you can look at, well, what would it cost to, in this example, to buy the 10 laptops, or if a donor has provided it to you and the donor has told you how much it costs them to buy the laptops, that could be an appropriate number. But there is guidance in there that tells you the different kind of sources of information that you can use.
Super. Okay.
And again, just to add, sorry, Sam, just to add on that, again, think about materiality. If it's lots of small value things that are not material, you don't need to potentially worry too much about fair value. But yes, some of the larger items you will need to.
Super. Okay, I was trying to get to the last slide, but it started at the beginning. In the last few minutes, let me just round us off with how to share your voice. So as I said, we really want to get your feedback. You've shared some comments in the webinar, but for them to really count as part of the international due process, it's really helpful to have them in writing, because we do analysis by where the responses come from and different stakeholder groups and things like that as well. So you can go to the website ifr4npo.org/have-your-say. It's available from the INPAG menu on the website if you hover over that. There is a response template which you can download. It's just a Word document. Save it with your details in the top section. Form your opinions on the different proposals by watching the videos, reading the documents, attending webinars like this, and participating in our outreach events. You can record your thoughts in the different boxes in the template. There are certain questions, 37 questions, but there's also a section at the end. Any other comments you want to share, you can, and you don't need to answer all 37 questions. You can focus on what you have an opinion on. And if you want to just write a comment letter rather than using the response template, you can do that as well. And then you just upload it via the same Have Your Say page on the website. Very easy. So what happens to all your comments? We know this, we're in this third and final consultation phase at the moment. It closes on the 16th of September. So once they're all in, they'll be analysed, digested. We'll consider all the comments and different balances of different things that people have said, put some of those things to focus groups, some of the ideas and changes that we want to make. We'll then go through the different advisory groups, the practitioner advisory group and the technical advisory group, and the donor reference group, especially for the donor reporting piece. And those changes will then be incorporated into the final version of INPAG, which, as Karen said, will be published in 2025, hopefully summerish, late summer, ready for adoption. So how can you stay engaged? Lots of different ways. Please do visit the website, ifr4npo.org. You can subscribe to our monthly newsletter. You can demonstrate your support through the website by putting your name or your organization's logo. That really helps us when it comes to advocating with donors or governments or big decision makers, to show that there's a body of people around the world who appreciate how important this is. You can join us and follow us on LinkedIn. We have a LinkedIn page. Register for events. The next one isn't actually on the website yet, but we'll be having an open roundtable on the 3rd of September. So please look out for that. And of course, we've got blogs on our website as well. So with that, a huge thank you. Thank you to Karen. Thank you to Paul for all the drafting of these financial statements, that it's been a pleasure to share. And thank you to all of you for joining with us and listening and asking those great questions. And we look forward to engaging with you more. Thanks very much. Bye-bye.
Thanks very much, everyone.
Thank you. Bye.